Hey there, good morning. G'day, it's Jimmy Trades. How you doing all? Good morning, Drew. Good morning, Jerome. Hope your day has been going well, or if it's just starting, it's getting off to a good start. Give it a couple of minutes, let a few bods join. Marcus, g'day, how are you, mate? If I do come across a bit funny today, I had a dentist appointment today, so my jaw is actually quite sore. So I'll do my best to get through this. Eating dinner tonight was actually quite a challenge. Ray J, morning. How you doing? So I thought today we might have a quick look back at yesterday's price action. Having a look at some narrative and logic and how that played out. And what I'm looking for with narrative and logic, because yesterday was actually a really good example across a number of assets. Well, good afternoon, Jerome. Thanks, Marcus. Sound is good. Nothing's too loud, hopefully. Let's have a look at the calendar first. So we should have a few extra bodies in here now. Anyone that joins can just catch up. Feel free to throw any comments into the chat and we can discuss those as we move through the stream or towards the end as we wrap it up. So having a look at the calendar, we do have some high impact news in the PM session today with the FOMC meeting minutes. I don't really look at this as impacting the AM session too much. So I would just move into the AM session with my normal game plan, just waiting for 9:30 open, and then just follow my strategy and my blueprint to execute my trades. So I'll be looking to participate after 9:30 today. If I'm trading oil, then I'm happy to look for a position after 9 a.m. Tomek, good morning. How are you, buddy? Thanks for joining. Obviously, we've got CPI tomorrow. So opportunity there to expedite some evals if you're keen. I will be doing that. I'm going to try and expedite 250 Apex accounts. And then on Friday, we've got PPI, and I've got a handful of 50K evals that I'm going to try and expedite for PPI. So I will be giving that a crack. If you do like the idea of trying to get through those evals quickly, remember you can use code Jimmy for Apex and My Funded Futures. Also, I'll mention Aesthetic Capital is launching very soon. Unfortunately, there was a delay. It was supposed to launch this week, but due to some technical issues from the back end, not so much aesthetics issues, but from the platform provider, they weren't able to launch this week. So there will be a couple of giveaways that I'm running with once launch happens. So excited to partner with those guys. Let's move over to the charts, and we'll start with NAS, NQ. And this is just having a look at, I've left the markups on here from yesterday, so you can get an idea of how the narrative and logic plays out. So we're on the hourly time frame here. So those of you who know how I trade, I use the daily for my bias, the hourly for my structure, and then I enter on the 5 minute. So using the structure and the narrative and logic behind that is looking at, the change in state of delivery, standard deviations, low resistance liquidity, high resistance liquidity, relative equal highs, those sorts of things. Hey, Nick, you made it. Good stuff. Thanks for joining, buddy. Make sure if you've got any questions, just throw them in the chat. As we move through, we'll answer them as we go. So we can see here, these are the markups that I had yesterday. And if we just go back a little, even back to here. Let's go forward a bar. So with this leg here, I was marking this out, looking at potential displacement through this leg for a change in the state of delivery. I also ran the standard deviations here off the Asia session. And you want to talk, Tommy wants to talk about, you're talking about today's session, Tommy? So I ran the standard deviations off the Asia session to see where that manipulation would project to. And I also ran off this leg that took liquidity here. And that gave us some potential targets. So what I liked about yesterday is we got this change in the state of delivery that was confirmed when we were left with this FEG here. So we had this displacement. Beck, g'day. How are you, mate? All right, Tommy, we'll have a look at that London session. So we see that we've got the standard deviation projection. What I really liked about this was that we had the -2 to 2.5, which is our first target region, was perfectly aligned with this low resistance liquidity through here. So I had a lot of confidence going into New York Open yesterday. And with the projection from the leg that took liquidity, the -1 was also aligned with that level. So there's a fair bit of confluence there for me. We also had these relative equal highs here. And I did like this for the draw on liquidity for the session yesterday. And that's how I work on the narrative and logic. I'd already worked from the daily and decided that I was going to be bullish on the day. And then I can use the structure to project forward where price could potentially move to. And as we move through the session, we see price doing exactly that. Now, unfortunately, during the AM session, there was no position given. I was actually looking for a pullback into this FEG here for a potential unicorn to trade off on the 5 minute. Unfortunately, price fell short and didn't provide an entry. And in fact, it was actually quite choppy, that initial sort of hour into the session yesterday. But we can see, with all that said, that the narrative and logic did play out. We reached the -4 here, and we can see a reaction, and that's off that Asia leg from yesterday. But we also have this reaction to this level here, which is off the leg that took liquidity. And that's natural, that's normal to see, some consolidation or retracement. And what we want to see, if price is to get back to live price, if we can get price pushing through this level now and then closing above the -2.5, then we have a potential target of the -4. So that was NQ yesterday, and obviously throughout the last several hours as well, but a perfect example there of our narrative and logic playing out. And let's have a look at oil, because oil did the same thing. Oil as well didn't provide an entry, at least not for the rules I have, the unicorn model. So I was bearish after coming into this. I think, what do we have? Let's go to the daily for a sec. That's right, we had the bearish FEG, and I really like this level. I've always found that when you have a swing high aligned with the bearish FEG, that's quite a strong area for potential reversal. Obviously the same if you have a bullish FEG with a swing low aligned, that we have potential for a strong reversal here, and we actually did get that reaction. So we just docked back to the hourly. My draw on liquidity yesterday was this area of low resistance liquidity through here, and that also perfectly aligned with this -2 to 2.5. So what I was really hoping for as we came into the session yesterday, instead of just this drop here, was it would have been great to see a sweep of this high before the move lower, but unfortunately we didn't get that. Therefore, we didn't get a trade. Now we have here, we see a close below the -2.5. Price pushed back up and has respected this area and is now moving lower. So that sort of narrative here gives us the idea that we might see price move to the -4. If we move back out to the daily, that makes it a little bit tricky, doesn't it? Because where's price currently located? It's currently located in a bullish POI, a point of interest. So if we start today's analysis, we'll start it on oil, moving from the daily through to the hourly. Straight away I look at this, and because we're at a bullish FEG, I'm looking for price to move higher. We had a reaction here yesterday as well. So Tuesday's candle reacted to this level and then immediately came back up and closed above. So for me, that looks like price wants to move higher out of this bullish FEG. So I'll clear all these tags. I don't know if anyone else uses these tags, but I quite like having these tags. I can quickly look at what my bias is, because I trade these 4 assets here, NQ, ES, CL, 6E. I trade them simultaneously with the 4 charts up at once. So I just find that a quick reference point to say, hey, oh yeah, I'm bullish on that, just, to try and avoid any confusion. So moving on, looking at oil today, to be bullish. Now, in saying that, we had that projection a bit lower here on the hourly. Now let's go down to the hourly and just run that projection again and see where it falls. Daily. So it's quite interesting to me. What I like here is that -4 lines up perfectly with this bullish order block. Like, it's to the tick. So even if price does melt through this FVG, we could see a reaction here for price to move higher as well. So until we get a close through this FVG, so that I would like to see if this candle, today's candle, does move through the FVG and close below, that invalidates this FVG. But if price does move through, let's say it does react to this order block and close up inside the FVG, then it's still valid. You might not get a bullish entry during the AM session, but the idea is still the same. So looking for bullish price action today on oil, and we'll see if we can get a entry come New York Open. Back down here on the hourly, we know that order block aligned here, and we did get that close below the -2.5. So there is still that potential that we'll see price reach to this level. We can also see that price has respected both of these bearish PD arrays. So when I have this sort of conflict, I guess you could call it, because I'm looking at this going, okay, well, price could definitely reach lower, but my bias for the day is bullish, then I just remain patient until I see a potential bullish setup that aligns with my entry requirements and looks like we might have that reversal. And if that is the case, then we might have to wait till the PM session. I'll be sound asleep by then, but it is what it is. So, we might even see something like this, where we get this reaction to that order block on the daily and push back through, and the candle may close inside this this bullish FVG. So that's potential there, or what I might, be looking for today. Because right now, this isn't looking very bullish. And if you look at, the market maker model, we've got the buy side and we're coming down on that sell side. But looking at the daily, I am bullish on oil. So I need to wait and be patient for that narrative and logic to align, or the hourly market structure to align with the daily. Some traders like to wait for the change in the state of delivery, and the unicorn model can obviously deliver that too. Let's have a look at chat for a second. Fun Mellow, thanks for joining. The unicorn model is this pattern right here. So what we have, we'd have a breaker here. The breaker, this would be a bullish example. So you'd have the highest up close candle would be the breaker and that would be in the leg before the leg that took liquidity. So this is the leg that took liquidity. So you have your stop hunt through here, and then this would be, say, your higher time frame point of interest. And then once price moves on through, you need to see displacement with an FEG aligned with the breaker. And then once that happens, then you can look for an entry. So you'd put limit orders at the top of the breaker. That's the only model I use to enter the market with. Jerome, what have you said here? I have decided to take a small break from CL. That huge expansion recently, which is very news orientated, is something I am not experienced with enough. I'll be watching carefully. Yeah, look, I don't disagree with you, to be honest. We know there's a lot going on overseas right now, and the price of oil is going to react to that. And it can be that volatile. You know, it only takes one small bit of news or something, and price could just completely disrespect our process, what we look for, our IRL to ERL. So it's actually not a bad idea. Let's see what plays out over the next couple of days. Yeah, you should start using the Uni Fund Mellow. It's really is the one set up for life. If you've got a similar strategy to the unicorn model, then I would certainly look to implement the unicorn model. Drew Freed has asked, would you not keep bearish as there is FEG in daily to reach in the discount? And H1 is still in bearish, change the state delivery. Let's go back to oil. So if you're looking at this range, suggesting we might reach lower into this discounted FEG, it's of course that's definitely possible, which is why, as I say, I would be waiting with oil. I use the internal to external idea. That's how I get my bias. So we are located at a bullish POI right now, and my hourly structure does not align with that. So that is for sure a time to remain patient. And price could more than likely come down here. Obviously, the market will do what it wants whenever it wants. We just have to be ready to react to that. And for me, this level here will definitely be an area of interest for me to see how price reacts. I hope that answered your question there, Drew. Let's jump over to NQ. So most recent information was price reacting to this swing low here. And we can see that price has continued to push higher. It's been unable to close below these wicks. And we're getting price moving higher. Therefore, I'm still bullish on NQ. This would be our first target, which was just shy of yesterday. and then our next target up here. So bullish on the daily for NQ. Marcus, so even though the FEGM price has returned to 50%, you still class as a bullish POI and not indecision. Yep. Because price is sitting in that. We'll just jump back there. I hope you don't mind me moving around just to look at the questions and answer them as we move along. So price reacted to this level. We see price pushed into this FEG and then immediately reacted and closed higher. So I would still have a bullish preference for today. If the candle does close through this, then obviously that makes this invalid. But whilst we're still respecting this FEG, I remain bullish. Yeah, I like what you said there, Jerome. The name of the game is patience. We don't need to rush to execute. That's what Rex accounts. You just want to be patient. You wait for all your entry requirements to be met. That means your daily, your hourly are aligned. Once you get a sweep of an hourly point of interest, that's when you start looking for a position. Then you want to have all your unicorn entry function criteria met before looking to execute. That's what gives us the highest probability trades. Sometimes it seems like all we do is stare at the charts. You know, realistically, this week up until London session today, I hadn't taken a position. So we're running our projections off the leg that took liquidity here. I run my my change in the state of delivery from this leg here. I know I've seen others. I think Ash even has his from this leg, and that's, you know, I don't disagree with that. It's just, for me, personal preference is, for me, this is the first moment in time when we do see that change in the state of delivery. So it's still anticipating price to reach higher. Price has respected this bullish point of interest. It's reacted off here a couple of times now. So still looking for price to move higher. So while we're on NQ, we might as well have a look at the London long. So I think this was our point of interest, this swing low. Yeah, I agree, Tommy. It was a good loss. Like the model presented, and in fact, I think there was even a second opportunity. So let's have a look. So here we are on the hourly. We have a bullish bias for the day. Price sweeps the low here. And then we move on down to our entry function time frame. So here was our high time frame point of interest. So we got a sweep of that. We then see we have a breaker here. So this is our bullish breaker. For it to be a valid breaker, we must have swing points on either side. Where's the brush? I have a brush here somewhere. There we go. So we have to have these institutional swing points. They must be present for it to be a valid breaker. Price provides a stop hunt. There's our stop hunt here. And then we see displacement back through the breaker. So we actually got two FVGs aligned with the breaker, one here and then one up here. And then as soon as we get it closed through, we can put our limit order in place, and you would have got a fill on the very next candle. And then we aim for 2R. So for me, I set my stop below this swing low and target 2R. Again, I liked that we had these failure swings here. So for me, they were a good looking draw on liquidity. And then we wait. Unfortunately, price did move lower straight away. Or pretty much straight away. And that was a stop. And that's just part of the game. We followed our rules. High time frame was bullish. Narrative and logic, our market structure was bullish. And we had our entry function present. There was actually another opportunity. Not as clean though. After this sweep, but you would have had to have your stop protected at this low at least. So that opens your stop up quite a bit. And if you were targeting 2R, you'd have to be down here for your stop. You might not have reached 2R yet. So you wouldn't have reached 2R yet. So also looking at the session, times here, we've got the Asia highs already been swept as well. So we may have potential seek and destroy sort of day today. With FOMC meeting minutes this afternoon and then CPI tomorrow, it might be a lower probability day. Let's have a look at the chat. Fun Mellow, how can you use market noise to benefit you? I actually try to avoid noise, which is why I trade on the 5-minute time frame as well. I like the less noise, the better. There's enough that goes into the psychology of trading and everything else with trading that the less noise, the better. The quieter, the better. You want to avoid as much social media as possible. And you want to really find a community where you can interact together in a common space and be supported. Unicorn University is a great space for that. You'll see the link in my description below, so definitely check that out. That's a place where there's no noise, just facts, good education, and you guys can learn a lot there and feel supported. The whole community is there helping each other. Monday, 30th September, hourly equal highs are looking good for a draw. Let's have a look at that. Yeah, I agree. I think that's the initial, maybe the initial target from the daily that I had marked out. So I do like that. We fell shy of it yesterday, by a couple of ticks, but I definitely think price could seek out that level today. NQ 1 min breaker 316 with IFG and 1 min SMT at the bottom was interesting to me. Let's have a look. $3.16. So this is the breaker on the 1 minute. So if you're trading the 1 minute, you want to have a 15-minute high time frame point of interest swept, and you would be using the 4 hour for your bias. So here's the IFG. Does it get to oh, it's right on it. Look at that. In the initial move anyway. Yeah, that's a valid 1 minute trade. We get the displacement through the breaker. We get this FEG aligned here. It also closes it gives us the IFEG. Price reacts to that level as well. It's a little bit choppy, but you would have been protected if you just had even if you had a tight stop, you would have been protected the whole time. So definitely a valid trade. Yeah, sometimes this sort of chop in the breaker does put me off as well, Jerome. You really want it to be clean, straight through. But this is valid. I mean, it's a valid trade. You just got to sit through a bit of chop before you reach your profit target. Noise takes patience. That's right. That's right, Marcus. X Tashan, I hope I pronounced that correctly. Buddy, NQ London Killzone Unicorn is valid or invalid, good loss or bad? No, it was a valid, in my opinion anyway, it was a valid unicorn on the 5 minute. It was within our time frame. So 2 a.m. is when the kill zone starts. So 2 a.m. So it was definitely a valid trade. Just in this instance, price wanted a second sweep of the liquidity before moving higher. So yeah, a good loss. You journal that one. There's not a lot you can pick out of it, I think, as to why you shouldn't enter that one. So we'll have a look at, let's jump over to Euro futures. So on the daily here, we've got price moving out of a bearish point of interest, so internal range liquidity. We then swept this external. And we have had a reaction to that. So what's difficult here for me is that we have such strong bearish sentiment through this leg lower that, you know, potentially this, even though we have a sweep of external here, we might actually be reaching for this level here, which is also aligned with this bullish FVG. So for something like this, where we've been in such a strong move lower, and even these bullish candles here are quite indecisive, that I don't initially just say, okay, well, we're at a swing low, so I'm going to be straight away bullish. For me, I would actually be looking at this as a neutral bias and then leaning on the hourly structure. Just catching up with chat, Tinker and Build. How you doing, buddy? I don't typically trade the London session. What are the targets for the lower day there to hit? Is it usually going after it in Asia high or low? I definitely look for the Asia session for price to reach for or react to. That's what I'm typically looking for. So on the hourly, just looking for low resistance liquidity. We can see we're still reasonably bearish here. Prices tried as it might to get through this large bearish FEG, but it's been unable to. It's just continued to react to that level. We're going to run our projections from this leg that took liquidity or pushed up into this point of interest, which would give us a target region of this -2 to 2.5. If we duck back out to the daily, that also does align with that low resistance liquidity I had marked out. We can see if we do reach lower, the -4 is close to this region as well. So I'm still bearish on the hourly for Euro futures. Being neutral on the daily just means I can be a little bit more flexible as well. So if we do see a change in the state of delivery or a reversal pattern, then we can potentially look for a bullish entry. Have a quick look at ES. So you can see on ES, looking at the markups from yesterday, exactly the same scenario as NQ. where we reached the standard deviation targets as well, and the reaction, low resistance liquidity, and we still have these equal highs here, which would be my target, initial target for today. And then we have this region here from the leg that took liquidity, the -2 to 2.5 standard deviation for our next potential target. Let's have a look at gold. Before we look at gold, Jerome says also, I've been studying London and I believe the first hour of the kill zone is to be ignored. 3 to 4 a.m. is best to hunt. When putting the volume indicator, 3 a.m. always spikes up. 2 to 3 is heavy manipulation. Interesting that you mentioned that, because I was having a similar conversation today. And I was actually suggesting that moving forward for London, I'm probably not going to trade. If I do trade London, I might not look to enter until 4 a.m. actually. I've noticed that tends to be a time where volatility kicks in as well. So it's actually interesting you mentioned that, Jerome. Okay, here we are on gold. On the daily, price is resting inside this bullish FEG, our bullish point of interest. So moving from internal to external. If we have a look at this dealing range, we can see that this FEG was resting, or is resting, in a discount, and price has reached into that discount of the range and is reacting to that. So there's good confluence there for bullish price action. So looking for price to move higher today. Hey, Jack. Thanks for joining, pal. Hope you're doing well, buddy. Are you back from, was it Spain? I think you went to Spain, was it? So on the hourly for gold, price is still reacting to bearish PD arrays, of what we'd like to see. If we can get a change in the state of delivery with some displacement through this level here, then that would give us our confirmation that price is going to react to that bullish daily point of interest and look to see higher prices. If we do get that change in the state of delivery, I would look to run my standard deviations off this leg here. And then we see that we have the -2 to 2.5 region aligned with this equal highs here. We also have equal highs at the -2.5. So there are some nice areas for drawing liquidity. Looking at the chat, Drew, let's say you have a neutral bias at 16 now, but a 10 a.m. candle, it confirms being bullish with changing the state of delivery, expecting bullish POIs. Will you change your bias right away and trade if bullish uni presents? Yep. If I get, if I'm neutral and I see the reversal with a change in the state of delivery, I'd happily look for a long moving out of a bullish POI. Yeah, it has been a bit of a slow week. Although you did miss a couple of opportunities yesterday, unfortunately. Not intentionally, obviously, but the market didn't play favorably for you, did it, Jack? Didn't give you those tag-ins. Also bullish on NQ today, mate. I hope that answered your question, Drew. Yes, during the session, if I have a neutral bias, then that gives me the flexibility during the session to move to bearish or bullish, depending on what I'm seeing in the market structure. How are we going for time? A couple more minutes. Throw any questions in, guys. We'll have a look at Dixie quickly. We'll have to start wrapping up. Got to make sure there's some breathing room before Ash does his Wednesday stream. Exactly, Jack. Yeah, if anyone's read that comment. So Jack missed 2 trades yesterday by a tick. Both trades didn't enter by a tick. And the important lesson there is that it is what it is, and you just got to roll with it and not get the FOMO and just want to execute because you've missed out. It's not great, obviously, when you see your entry function play out and you're not in there, but it does happen quite often. Price will run without you. When it's within a tick, I think that makes it just that little bit more frustrating, I think. So looking at Dixie on the daily, we had our move here from internal to external. So I'll be looking for price to move lower today, even back into this region here. There's still room in this FEG for price to move into. Daniel, how are you, mate? Thanks for joining. To me, Asia high was not swept. I have Asia range from 7 to midnight. So is it still a target? So let's go back to NQ for a second. I'm bullish on ES, by the way. Let's have a look at the 15-minute. So I use the kill zone times. So if we look at the indicator, I use the ICT kill zones and pivots, and the times I use are for Asia, and this is all Eastern Standard Time. UTC -4 is what I have my chart set to. So for Asia it's 8 p.m. till midnight. London is 2 a.m. to 5 a.m. So that's the kill zone times that ICT promotes. So that's what I use for the session times. Kagulagano. Sorry, dude, if that's wrong. Thanks for watching. Hi, Jimmy. Quick one. So I'm looking at EU. We took the external liquidity. Now I'm anticipating price going for internal, but we swept that SIBI previous, but not fully. Can I still use the SIBI? Let's go and have a look at. Is it use futures or Forex? Not that it really matters. There is a slight difference between them, but so you can see here actually that there is this slight difference between the Forex and futures. So futures is, or has moved through this area. Hang on, I'm looking at the wrong chart there. Let's go back to this one. There we go. I don't use the micros for 6C. I don't even know why that's there. Let's get rid of that. So moving from this CIBI, so this, it hasn't fully, it's not fully mitigated, or it hasn't been closed through yet. So even if price was to come back up, it still has room to push up into here and reject from. Unless we get a close through, then I would say that that has been disrespected. We'll have a look at the Forex pair. So if we do sweep this low, if that's what happens and price does move, we can also anticipate that to happen, because this FEG, this CIBI is still valid. We still have, 50% of that open. Thanks, Jack. See you later, buddy. All right, guys, we might start wrapping it up there. Throw any last questions in you might have, and we'll start wrapping up. I'll have a look at GBP while we're waiting for any last questions to roll in. So on GBP on the daily, I'm still looking for price to reach into 50% of this dealing range here, into this bullish FEG, potentially this one here. Our point of interest is this swing low. Price closed through that. So that's our most recent point of interest. So it invalidated because we didn't get the move higher from there. So I'm still looking for price to move lower. All right, if there's no more questions, guys, we might wrap it up. Really appreciate everyone tuning in today. It's a great stream today. Thank you for your interaction. It's great to be able to chat with you guys and share my insights with you all. Thanks, Jerome. We'll see you later on, buddy. To everyone that participated today, thank you so much. To everyone that tuned in and watched, really appreciate you joining. And we'll be back next week at the same time. A little bit later for me, actually. It'll actually be 10 p.m. my time, because I'm pretty sure Daylight Savings finishes in New York this weekend. So just remember that as well, guys. There will be a change in time potentially for some of you. Trade safe, everyone, and we will see you all next week. Bye for now.